Property investing has created more millionaires than any other asset class. It's one of the most secure, predictable, and scalable ways to invest. But let's be honest, nothing worthwhile comes without a few challenges. And while some people see these as deal breakers, smart investors see these as small hurdles working towards their financial freedom. So in this video, I'm going to break down the harsh truths of property investing. Number 1. Property is not 100% passive, but it is the closest thing to it. You might have heard that property investing is 100% passive. Not quite. Yes, you'll need to make smart decisions up front, choosing the right property, structuring your finances, and setting up management. But here's the truth. Once your portfolio is set up, it requires minimal effort. Use professional property managers. They handle your tenants, your repairs, and collect your rent for you. Choose high demand areas, so vacancies and tenant issues are rare. Set up systems, so your investments run smoothly while you focus on your career, your family, and your lifestyle. Compared to starting a business, investing in stocks, or getting a second job, property investing can be one of the simplest ways to build that second income. Number 2, cheap properties can come cheap, but can be expensive in the long run. People love the idea of getting a bargain, but the cheapest properties are rarely the best investment. A cheap property in a bad area can cost you more in maintenance, void periods, and tenant issues. But a strategically chosen investment in high growth, high demand areas means higher rents, easier management, and capital appreciation. Instead of just looking for the cheapest deals, investors focus on quality locations where tenants want to live. Strong rental demand, so your properties are always occupied. Long-term appreciation, so you build wealth over time, not just from the cash flow. Number 3, debt sounds scary, but it's what makes property so profitable. When it comes to building long-term financial stability, understanding the difference between good debt and bad debt is massively important. Bad debt is used to fund a lifestyle rather than investments. It covers things like luxury cars, shopping sprees, nights out, holidays, financed through credit cards, overdrafts, and high-interest loans. The key issue with bad debt is that it pays for your liabilities. It means you can't actually set up any investments that pay you. Many people fall into the trap of bad debt just to maintain an image. But in reality, they're left with no real wealth or financial stability. On the other hand, good debt is used to invest into assets and create your financial future, which builds over time. Buy-to-let mortgages are a perfect example of good debt. Using that debt to buy properties that grow in value over time, and your tenants cover your outgoings. By leveraging good debt wisely, investors can scale their portfolio, benefit from capital appreciation, and build cash flow over time. The difference is clear. Bad debt drains your wealth. Good debt builds it. Every successful investor understands how to use leverage to their advantage, and this is a key component of building wealth. Leverage is the unsung hero of property investing. It's what allows you to own a 200k asset with just 50k, which you can't do in stocks or crypto. Yes, interest rates can fluctuate, but you can prepare for this. Fixed rate mortgages protect against sudden rate hikes. High yield properties cover mortgage costs even when rates rise. Long-term appreciation ensures your investment grows in value over time. The reality is interest rates rise and fall, but property has remained one of the most secure wealth-building assets of all time. Number 4, the market moves, but property always wins in the long run. Over the last 40 years, property prices have gone up and down, but they've never stayed down. They always bounce back to all-time highs. The north of England alone is projected to grow by 30% over the next 5 years. The key isn't timing the market, it's time in the market. Many investors fixate on cash flow, but the real wealth is built through capital appreciation. Number 5, cash flow is great, but real wealth comes from long-term capital appreciation. Yes, monthly rental income is great, but imagine buying a property for 160k that doubles across the next 15 years. Rental income gives you short-term cash flow. Capital appreciation gives you long-term wealth. The best strategy? Focus on both, so you're making money now and in the future. Number 6, property is powerful, but not for everyone. Investing in property is one of the most proven ways to build wealth. But let's be real, property isn't just about buying a house and letting the money roll in. It takes time, effort, and expertise to get it right. Negotiate the right deal so you don't overpay. Manage renovations, contractors, and unexpected costs. Find good tenants and keep the property profitable. But beyond the practical steps, it also takes mental strength to overcome the fears that hold most people back from taking those first steps. What if the market crashes? What if I get bad tenants? What if no one rents my property? These are valid concerns, but they're risks that experienced investors know how to mitigate. That's why having the right team behind you can make all the difference. At NPP, we help time-poor professionals like yourself build hands-free property portfolios. Instead of spending years trying to figure this out yourself, why not leverage the expertise of a professional team? So of course, you could do this yourself, but here's the truth. Every investment has challenges, but property remains one of the most proven means of building wealth of all asset classes. It beats inflation, it appreciates over time, and it gives you cash flow. And thanks to leveraging, it lets normal people build millionaire wealth without needing huge capital. So yes, there are things to consider, but deal breakers? Not even close. If you have 40K and you're ready to get investing, click the link up here or click the WhatsApp group link in the description and we'll send deals straight to your phone.